the Finance Committee to order. Duke Legislator Duchessis has some more information
Thank
for
you,
us.
Mr. Chairman. I did forward by email, and you have a hard copy now, of the agreement that exists in Albany County for the Interfaith Partnership for the Homeless that was introduced to us at the last meeting. We're going to be getting a little more information, financial information. I'll pass that on to you also via email and hard copy, and so that we can consider it as part of the budget.
Thank you.
Thank you.
Thank you. Next on the agenda, we have a presentation from Toski and Company. They did the audit for last year, and they're here to present their findings.
Should we stay away here?
I had onions for dinner, so.
That's okay. My name is Joe Klimek, and this is Tim Thomas. We're both directors of Toski and Company. This is our third year doing your audit, and we'd like to just take a brief second here and thank you for the opportunity to be serving you. Over the last 3 years, we've seen lots of changes to your financial statements, and this year, everything's been cleaned up. Okay, we hit the issues before with the internal service fund, the self-insured healthcare, self-insured healthcare fund. All those issues have been cleaned up. So we will be issuing a clean opinion on your 2013 AUD that goes to the state controller. There's still, that's what you issue. Those are your financial statements, which is called the annual update document to the state controller. What we have here is a summary of the information that's in our reports and in the AUD that goes to the state controller. That's about an 82-page document. For this meeting, we didn't need to show you all those. A final will be coming out this week. We're needing some more information from your attorney and a representation letter from management. We should be able to complete our audit and our services by the end of this week. So the first item of business here is a report to the county legislature. Last year was the report to the board of supervisors. So it's nice to see the change. We audited the statutory basis financial statement of the county, which is that document I call the AUD, go to the Office of State Controller. We also do our audit in accordance with government auditing standards, because you receive federal funds and state funds, it's required. And OMB Circular A133, which is an audit of your federal programs that we need to audit. Significant audit findings. Well, basically, management is responsible for the selection of its accounting policies, its procedures, its internal controls. We're not part of management. We are independent auditors opining on your financial statements, and we review your internal controls, going through our procedures, our risk assessment procedures, and that's our role. Management is responsible and to oversee the preparation of the financial statements with your county legislature oversight. You make the laws of the county, and management is supposed to be administering those laws. In your financial statements, we have management estimates. There are a couple estimates in your financial statements. The biggest one is your workers' comp fund. You're self-insured in workers' comp, and there's a incurred but not reported liability in that fund, and we evaluated the key factors in developing that liability and determined that it's reasonable in the whole. In the final document you'll get, there'll be disclosures, notes to the financial statements. In there's a couple of things we'd like to turn your attention to when you get those. There were prior period adjustments that were made to correct the beginning balance as of January 1st, 2013. This is a result of the accounting being completed of the internal service fund, the so-called trust that's been now in a part of being closed out. There was $2.8 million in additional fund balance that we added for deferred revenues that were recorded in prior years, based on the fact that we weren't sure of the proper amount that was being reported to the state for its claims. 2.8 of that has been restored to your fund balance. In addition, there was 1.6 million and amounts due from the internal service fund to the county for amounts that were overpaid and over the premium equivalents over those actual costs. So the county for years put premium equivalents into the fund, and they were, the actual costs were lower. So you did get a refund, I guess, and finally it was realized, I guess this June. But we made a prior period adjustment because that was really there as of January 1st, 2013.
Just so I can wrap my arms around this. The money that we just received from the trust, the 1.2, is that right?
They're going to do the
1.2.
whole thing. Yeah, probably 1.2.
1.2 that we just received. That money, because we received it in 2014, in next year's annual update document, we'll show that as a revenue coming in?
We adjusted
No, they
the beginning
recognize it.
equity.
We recognize it this year, yes.
So it was already in 2013 accounted for?
Yes.
In this year?
Right.
So, because it was accounted for in 2013, just in plain terms, so we can understand it. If it was accounted for in 2013, the 1.2, or whatever, now we just received a check for 1.2.
Right.
Where does that go?
Basically, here's what we did was set up a payable from the trust, okay, the internal service fund, a payable to the general fund.
Okay,
So when you receive those funds, once Sean makes all the journal entries into his statements, into his accounting records, all that is a payment of a liability. We have a receivable in the general fund now, and the cash is in what was at the end of the year. This year was in the internal service fund. So when you receive that cash, you just relieve a receivable in the general fund, relieve a payable in the internal service fund.
It's already in your equity.
right, so what I'm trying to,
It's a balance sheet only, does not affect equity.
right, is the money physically there for us to use now?
Yes.
So we can, and I'm trying to, because I've heard different people have come up and asked me the question of, you guys are using part of the money for one-shots in our capital projects. How can you do that? Because it's already been accounted for in a previous year,
Do you know how when you do your budget, sometimes you appropriate some of your fund balance?
right?
That's how you would do it, by appropriating what's in your fund balance.
Okay. Just want to make sure that I have the answer to the question because it's been asked. I actually asked Sean this morning when I met with him briefly just to explain it, and we were trying to figure out, I was trying to figure out, and not so much, I don't doubt what you guys are doing is accurate. I need to know how to explain it when my constituents say, how can you do that? It's already been accounted for. Well,
It's in your fund balance.
it's in the fund
So
balance.
it's in a fund called,
So that money will not come in as an unanticipated revenue in your 2014 audit.
that's right,
It won't come in as an
won't.
unanticipated revenue.
Right.
Gotcha. I'm clear.
Just a payment of a receivable.
But the interesting thing is that 1.2, and there's still a little bit left in there that hasn't been distributed,
40,000 or,
pending ultimate resolution of everything.
right.
Bottom line is, since the middle of 2007 through the beginning of 2013, that was the difference between what you figured it was going to cost you based upon the premium equivalents and what it actually did.
Right.
So for all the angst that you went through with respect to the whole concept of being self-insured and the trust, you did have a positive experience through that point in time.
But that's because we charged too much for the premium equivalent to begin with.
I suppose that's one way of looking at it.
Well, the way I look at it is I just charged whoever was paying that bill too much money for the last 7 years. And now, it'd be no different than, for instance, we as the county have to levy a tax every year and we don't spend the money. We ask the taxpayer for $500,000 to buy 2 new trucks, 2 plow or whatever. We don't spend it, it goes back in the fund balance, but they just paid it. It's not a great way to do business.
But that's the difference between having a self-insured plan versus.
Right. I'm not criticizing, I'm just saying, it isn't that we made all kinds of money off it, we overcharged the premium equivalent.
Right. So now that's all in your fund balance now.
Now, what we got, that's good, okay.
Okay. So anyway, difficulties in performing the audit, Sean and the staff and everybody else, the Department of Social Services, we spent a lot of time there because we have to audit those federal programs. Everybody was very helpful to make sure that we were able to file this thing on a timely basis. There was a couple minor audit adjustments we made to, the management has corrected those misstatements. There was no disagreements with management during the year, where management will be giving us representation. We're not aware of management, on page 3, we're not aware of management's consultation with any other independent accountants. Other findings or issues, as we issue our financial statements and go through the policy procedures, we'll get questions from management how to account for certain transactions, how to disclose those things in the notes, and it's part of our normal professional relationship, being the overseer of your financial statements. Turn to page 4, and this is where the good news is. This is the required report for the single audit, scheduled findings and question costs, the year ended December 31, 2013. Type of auditor's report issued. The first one is we have an unmodified for the statutory basis statements. This is the first time in 2 years that it was been an unmodified report. Everything's been cleaned up in your statutory financial statements. Because these are statutory financial statements, we still have to issue an adverse opinion because they're not in accordance with U.S. generally accepted accounting principles. We have a recommendation in our management letter what the county needs to do to get there. It's up to management and the county to determine whether you need to file those type of financial statements. So what you got a nice rating today, increasing your rating today. So if your rating agency is not expecting you to have U.S. generally accepted accounting principle financial statements, there's a decision that you may not need to do that. Anyway, keep going. Internal control over financial reporting. So if we find material weaknesses in the internal control or significant deficiencies or non-compliance, we have to report it here. If we see there are no instances of those type of things, that we have to report to the board, to the legislature. For your federal awards, we audited 3 major programs, which are listed under number 7, the Temporary Assistance for Needy Families Program, the Low-Income Energy Assistance Program, and the Medical Assistance Program. We had no findings over those. There was no weaknesses in internal controls, and we had issued an unmodified report, which is a clean opinion, on compliance with those programs. I'm going to let Tim go through our reports, beginning on page 6.
And that's a big deal that there's no findings of compliance on that program, because when you look at where you spend your money, the biggest chunk in your budget is spent on DSS-related programs. So to know that they are being appropriate stewards of your money, I think should be very comforting to you. It would be to me if I was sitting in your chair. On page 6 is our auditor's opinion. Basically, that's our report on the financial statements. And yours we refer to as statutory basis financial statements, because you file the annual update document as your basic financial statements, which differs from what many other counties do in terms of these are fund-based statements. Bottom line is there's a bunch of long-term items that don't show up on these statements. For example, none of your capital assets, your buildings, your trucks, all that stuff doesn't show up as an asset in these statements. The liabilities for any bonds that are outstanding, or compensated absences, or the commitment, we call it the OPEB, the other post-employment benefit obligation, the health insurance promise that you make to your retirees, the liability for that isn't reflected in here. We talked about what our responsibility is and what your responsibility is in these financial statements. You're responsible for the fair presentation of these statements in accordance with the basis of accounting that the New York State Office of the State Controller prescribes. And it's our responsibility to give you an opinion on those financial statements. I always tell people that when we do an audit, the only absolute guarantee I can make you is that these statements are not 100% to the penny accurate, because Joe talked about estimates that we made. One of the significant ones was the incurred but not reported liability for the workers' comp. That's best guess. We don't think that anything, when the dust settles, with the benefit of perfect 20/20 hindsight, would be any different or significantly different from the way it's shown in here that would cause anybody to change their opinion on the financial statements. We went kicking and screaming as a profession into accepting our role of being responsible for fraud. We never used to do that. Now we actually design audit procedures to look for that kind of stuff. Had we found any, we would have told you. There wasn't any that we found. We made inquiries, we poked around, we looked at the internal controls. That's a fancy word that means we looked at all the checks and balances and policies and procedures that you have now and your predecessors, well, and in this particular case it would have been the Board of Supervisors, put in place to make sure that the county money got spent the way it was intended to be spent. And we think that the controls are sufficient, that there's adequate safeguards, that that's what's going on. When you turn over to page 7, the first thing you're going to see at the top is a oh wow. It says basis for adverse opinion on U.S. generally accepted accounting principles. Because you don't issue government-wide financial statements that include the long-term assets and liabilities of the county, you're not in conformity with generally accepted accounting principles. So we got to tell you that in the basis for adverse opinion, and then the adverse opinion that we give you. It doesn't mean that we have a big problem with it. The rest of the stuff is, it just means we can't give you this opinion. Then we come down to the unmodified opinion for 2013. And what we're saying there is we don't have any problem with the way you accounted for any of the financial activity that occurred during the year in conformity with that statutory basis of accounting. That's a lot better than what we did for 12, where we had some qualifications because we had some issues with respect to how you were accounting for the self-insured health insurance. We just weren't sure where all the chips fell. Now we know where they're all falling, and we're comfortable saying that this is where things are. When you look at where you've come since 2011, kudos to you collectively as a group and to Sean and his team for what they've done. It's quite an accomplishment, and it's worthy of recognition. There's some required supplemental information that we include, and we address that in a paragraph. And then, because you're a governmental unit, you're subject to regular auditing standards and then another, like a pancake layer of governmental auditing standards on top of that. There's some additional things that we do because you're a government that we wouldn't do, for instance, if you were General Motors. And we basically are calling your attention to the fact that those also apply. And if there was another report issued, we include that report in with your single audit. You just looked at the schedule of findings and question costs, which is a component of that single audit. There's nothing, when you go look there, that's going to cause anybody any angst. We don't take exception with anything or have any findings as to issues of non-compliance, either at the countywide level or at the major fund level. That's good. That's what you want to hear. On page 9 and 10, we kind of made summary balance sheets and statement of operations for your funds, the funds that are included within the annual operating document or update document. That's 82 pages long. We kind of tried to condense it to 2 pages just so you could, it helps to kind of get your head around what's going on. And the key thing to take away from looking at page 9 is that you got a real healthy fund balance in the general fund. A couple months worth of operating revenues, which is good because you actually need that cash flow to run your county. When you think about it, you levy your taxes, then you have your collections, and that money really doesn't start to come in until the end of January or February. You need money to get through that 2-month period. It's got to come from somewhere. Fund balance is kind of like the offset to the assets, the most significant of which is the cash that's going to get you through that period.
Question about fund balance. The Controller's Office tells us, what, 10 to 15% is a healthy fund balance? Or has that number changed? 10 to 15% of your total budget,
That's a good number to have in your unassigned,
unassigned.
right?
In your unassigned fund balance.
And if you have. look at
And you're about
page
there, because you're at about 10 million out of about 73 million, so that's in that 10 to 15% range, pushing towards the 15. So you're kind of where you need to be to allow you to have the liquidity to pay your bills as they come due.
And to answer your question the time before, I'll go through the accounting and internal service fund. If you look at the internal service fund column here on page 9, there's $3.5 million in cash or in that fund. If you go down to the liabilities due to other funds, there's $2.6 million due to other funds, part of which is going to the general fund. Okay, and that's how the accounting of this took place. So, okay, it's all in the balance sheet. You can see that this internal service fund has no fund balance. Everything is due to other players.
Okay.
The next page, on page 10, in a governmental venue, we call it a statement of revenues, expenditures, and changes in fund balance. In the real world, you'd call that an income statement. Sometimes it helps to get your head around it by looking at it that way. We list all the funds on there. Again, the one that's of most relevance to you is the general fund, because that's the one where the day-to-day activities get accounted for. And when we look at that fund, you'll see that in the current year, you had a gain in terms of revenues over expenses of almost $1.3 million, which is good. The one thing that I would call your attention to, and is it a problem yet? No, but it's something that I want to keep my eye on, is in the sewer fund this year, there was a deficit of $35,000. That is something that is financed largely by user fees, and you're going to want to monitor that to make sure that it stays a break even, just so that you can, and there's still positive equity there, so it's not a problem, but not a problem yet, but I think you would want to be able to very clearly demonstrate to your constituents that you aren't using general tax revenues to subsidize something that's
Like we did the nursing.
that's being just for a portion of your constituency. So that's something that you might want to just keep an eye on a going forward basis. Capital Projects Fund has a negative fund balance in it too. Capital Projects Fund flops from positive to negative depending upon when you issue debt. That's totally usual and not something that's outside the scope of what usually goes on. Subsequent to that is our management letter, and that's where we make reference to operational and other issues that aren't necessarily findings or anything like that, just suggestions that we have. The first one deals with GASB 34, and that basically consists of full accrual, the concept of full accrual financial statements, where you include capital assets and all your debt and all that other stuff, so someone can get what is purported to be a full picture of what's going on.
That GASB 34 is what's U.S. General Set of Accounting Principles require. And you don't do it that way. That's when we did the adverse opinion on overall financial statements.
And because we're required to express their opinion that way, we just felt that we should point out to you that that's something that you should consider. Should you do it? Are there any downsides to doing it? I guess today, since your rating went up, I'd have to say probably not. It's going to cost you more to do that. I'm not sure that it's worth spending the money at this point in time, but we still feel that it's important enough that we call it to your attention and that you revisit that decision on a reasonably close to annual basis. The second part of that is the concept of the post-employment benefits other than the pensions. The promise to your retirees for the health insurance. That's a big nut. That number's a big number. you don't have an actuarial valuation to determine that, but it's based on the number of your employees. I don't know, Joe, if you had to guess, it's obviously it'd be a big wide swing between $50 and $100 million. It's probably what kind of a liability you're talking about. You're not going to pay that out of next year's budget. You're not going to pay that incrementally out of the next 10 years' budgets. It's probably going to be closer to out of the next 20 or 25 budgets on a pay-as-you-go basis. But it still helps to put into perspective the cost of that promise that you made to all those retirees. And right now, you don't know what that is. And at some point in time, you may want to consider undertaking the actuarial valuation to find out how much that promise that you've made actually is going to cost you.
That's the unfunded liability that.
For the health insurance.
For all of us.
Yep. For the people from the time they retire until the time they're no longer eligible.
Basically, the concept is you record that expense for future retirees or when they retire while they're working. So they'll be retired and you'll be paying their health insurance. The GASB wants you to record it while they're working. It's a long-term liability. And in New York State, there's no way to fund that. There's not an allowable way to fund that right now. But you may want to have an actual report prepared so you can, you can use it in negotiation, whatever you need to do with it. It gives you information what the total liability will be.
So you got an idea about what the magnitude of the promise you've made is.
Is that to have that done, is that a big, long, drawn-out process, or is it something?
Well, there'll have to be some demographic data sent to the actuaries and with your current self-insured health care product that you have, and they'll make the determination what the liability is. So there'll be some personnel will have to be involved with that.
It's probably going to take a couple months worth of, not continuous involvement, but a couple months worth of dialogue with an actuary, intermittent dialogue to come up with and fine-tune a
Was
liability.
you money well spent if we did it?
It helps you to frame where you're at.
Right.
I mean, to know the magnitude of the promise that you've made. And Joe alluded to it, and I'm not sure, we can only speculate on it, but a lot of our other clients tell us that they do find that to help put into perspective the benefits that they're giving to their employees when it comes time for negotiations. It helps you to understand what the cost of the benefit package is on a more comprehensive basis, or at least other entities that are in your situation seem to have that opinion. Whether it's successful or not, or has any bearing on where anything ultimately comes out, who knows?
And if I can add just one more thing, that's why an actuary is one of the things I think is an asset to health insurance. So thank you for adding that.
And then the last point we talked about, there's some old items sitting in accounts receivable for DSS. They're offset by deferred inflows, which basically they're parked on the balance sheet as an asset and a liability or the equivalent. No real effect on your equity, but at some point in time, that's probably something that you should at least look at cleaning up. We had to look pretty hard to find something that Sean did real egregiously wrong, and that's the best we could do. And there's really, it's in terms of where you're at the end of the day, there's maybe $1 million worth of stuff in there. It goes from 2003 to 2011 that you may never get. It's not in equity, so it's not like it's going to have a detrimental effect on your financial position. But at some point in time, you might as well just take it off the books if you don't think you're going to get it.
Or try to collect it.
Or try to collect it if there's an opportunity.
Is any of that the accounts receivable from the nursing home?
No.
That's all.
It's all basically.
We said 2003, and then we sold in 2007.
Yeah. No, it's just receivables that have been out there that long.
Are there any other questions for the gentleman?
Thank you.
I guess the last thing is we're at the end of the 3-year term. We understand that you've gone out for RFPs. we understand that that's probably a good idea, that you should do that. One of the things that we get sometimes so involved with being professionals and getting to the point where we can give you our opinion on what we're doing, that we forget that at the end of the day, you're really our customer. And we're selling something and you're buying it. And I don't think we always do a real good job saying thank you. And not knowing where this whole process is going, I just think that, and I'm sure Joe agrees, that it'd be wrong if we didn't say thank you for trusting us and giving us the honor of doing what we've been able to do for you for the last 3 years. And we don't really get the opportunity to thank you, but we do appreciate it.
And we have responded to the RFP process. Okay.
Thank you.
Thank you.
Thanks.
Okay. Moving on with our agenda items. We have two resolutions that need addressing. One is a resolution approving the abstract of audit claims. Can I get a sponsor in a second? Barb, Ryan. Discussion. All those in favor of moving the full board?
Aye.
Opposed, abstained, motion carried. The next is a resolution appointing a member to the audit committee. Can I get a sponsor?
Right,
I'll
Alice.
sponsor.
Barb? Ryan?
You're looking for a volunteer?
Now I'm looking for a volunteer.
I think it's my turn, to be honest with you.
So we'll make a motion to amend to insert your name.
Correct.
Barb will second.
Yeah, I think it's your turn too.
All those in favor of the amendment?
Aye.
Opposed, abstained? Discussion on the resolution as amended. All those in favor of moving to full board?
Aye.
Opposed, abstained? All right. Under other, Cheryl just passed out the transfer of funds report and our procurement record. We don't need a resolution with this. We'll just look at it. Yeah. Any items that people want to discuss on any of these? No? Okay. The other thing is, as the auditors tonight explained, we did go out to RFP for a new auditor, and I was looking for the committee's opinion on setting up a subcommittee that'll include like the treasurer and somebody from our committee to review them, kind of break them down, and then submit a report to us, as well as the RFPs themselves are in the office if we each have a copy, so that we all can look at them as well. What are the committee members?
Is that something that you would like to serve on, or?
Well, yes, but I think that other members
Oh.
from the committee should
Okay.
also.
Oh, I thought you meant
Well,
just,
I like the
just
idea of
one.
having Sean.
Yeah.
Participate.
Yeah.
Yep, I will.
Any,
I'll volunteer
is that
too.
okay? Is that, everyone's okay with that?
Yes.
All right.
Martin, Terry, Bart,
Would-
Sean.
And Sean. We'd like you to sit on our subcommittee to look at the RFPs.
So now you know.
Just so you know.
That has to be done and by the next board meeting to get
The 30th?
You might want to pick 2 other
that's
legislators.
why I was looking around the room.
Okay, yeah, that could be a problem.
You 2 are out.
All right,
Who, me?
Dawn next week.
yeah.
That's all right. I can still do it.
You're willing to,
Have to be looked at before the 30th, yeah?
okay,
All right.
all right.
All right. Who's Alex replacing?
And Tom, you're not going to the big soiree. Will you mind serving on the committee as well? give us some guidance. Thank you.
Can we do it on
On a Tuesday?
morning?
Tuesday morning?
When we're down.
What, like 6 o'clock in the morning?
No, at 9, or after we're done.
Well, we have a public hearing at 10:30.
So between then and 10:30, we can.
As long as we all pick them up before then to review them, to see what's in them.
Are you good with that? Like between 9 and 10:30 that next.
Okay. All right, we'll do that.
You two gonna stack up and get them?
Yes.
Okay?
Are they on?
25th, 26th.
Yeah, they're setting up in the office.
Okay.
Yep. All right, and then the committee will report to the legislature with a recommendation, and we can do as we please at the end of at our next board meeting.
Sounds good.
Were you going to do something with the courthouse or no?
Yeah, we're ready to talk about that whenever you
Oh.
that point.
I thought you were adjourning.
No,
Sorry.
no.
I was getting ready, so.
No. So as long as we're okay with that for the, I know that also a deadline's coming up for the budget procedure. We have to have our recommendations in to Cheryl to the chair, myself, by the 25th, to give to Cheryl by the 26th for amendments to the tentative budget. So email, call, text, if you want to get together, we can get together and go over it. So just keep that in the back of your mind. Okay. And other.
Well, it's been brought to my attention that we've all known that the old courthouse roof is in desperate need of repair. However, it's gotten a bit worse in that it's really affecting the structure. Bricks are becoming loose. Paul has done some preliminary estimates, and we wanted to bring it to you tonight, just to gauge your level of support. I'd like to see us act and fix this roof so we can, put another one of these problems behind us. And in regard to the specifics, correct me if I'm wrong, Paul, to fix the roof, which would solve the problem long term, would be about $70,000 was the initial bid that we got. I think it was 72. And, but however, should this be something that the legislature wishes us to act upon immediately, which I think we should do, because I think we're getting to almost an emergency point where it could be a real problem, then we would go through, follow procurement policy and get our 3 bids and get it done before the winter. There is an option to repair the roof at a smaller cost, about $25,000?
About 20.
Okay. But that's, the estimated lifespan of that would be more than half. I think the new roof would be about 25 years at the least, and repair would be about 12. And the issue is the roof comes down, and I don't know the technical word, Paul, correct me, but it comes down and it goes out. And we want to fix the roof so there's not that, what's it called?
We're gonna take the hip out of the
Yeah.
roof and
So,
Very technical.
But, so that's the general gist of it. Is there anything I'm missing?
no, it's been an issue for about 4 or 5 years. It's something that was on the former needs assessment committee's agenda for a while. I had an estimate that was about 3 years old for a repair of about $8,000, and that was something I was anticipating doing out of my operating budget. When I reviewed the repair number, it seemed very low, so I talked to our roofing contractor. He reviewed the number, and it actually was 20,000. So at 8,000, I was willing to just do a repair, but now that we're looking at 20,000 for a repair compared to 72,000 for a complete replacement, and also eliminating the hip so that we've got one smooth runoff. To me, that's a building we're going to have for many years to come. I think it's worth investing in.
Before you go, Terry's ahead of you, but I had a question.
Okay.
I get to go first.
Chairman first? Okay.
And just real quick, there is no resolution in front of you because this was just brought to our attention after the deadline, but we thought if we did bring it up tonight, and there was support, then we could follow through the process and maybe have something passed by the end of the month, and then we can get it done before the winter. So I apologize for not having the resolution ready, but this is something that is just, the information has just come available recently.
Now, by taking out the hip, it has historical relevance and such. Is this going to,
The building
Damage.
is on the historical register, this work will not alter that.
Terry?
Just to clarify, it's this old courthouse over here, right?
It's the old courthouse on Park
Economic-
Street.
On Park Street.
The
Okay.
oldest.
Okay. The
Where,
oldest, okay. So that is not a slate roof, okay.
No, no, it's shingle.
Okay.
It's where History and Archives and.
Economic.
Every time it rains, we have workers in the basement
Okay.
with the water, trying to get the water out. I mean, it's become a real, that was, we could deal with, but the thought of a brick falling on someone at this point, I'm extremely concerned that we get this done.
So
Yeah,
you,
anyone that's been to the building, the rear entrance where the elevator is, you'll see little pieces of brick on the ground, and it's basically coming from the roof leaking into the structure, freeze thaw, the bricks getting wet, holding the moisture, deteriorating the bricks.
Tom?
I know that it's on the historic register, and I know that it won't, what you just said was it won't take it off of it, but we still want to keep the historical integrity of the building, and if it was, I guess, I don't know, maybe Ryan would know, but if it was made that way for a purpose, while some might disagree, because they want to, I don't want to take away from the integrity of it either, or of what it was originally, because that's one of the really finest buildings we have left in this county. I mean, it's like one of the jewels of our historical, value. So, and the other thing, I do know that at one time I was talking with the president of the Painters and Tapers, and they had offered up with their apprenticeship program to possibly paint. Has that ever been?
That's the first I've heard that discussion, Tom. I do know it is going to need to be painted. What I would envision is that the roof get repaired.
Right.
We'll get the brick dried out. We'll make the structural and the brick repairs next summer. And then at that point, the building would be in need of a...
Right. Well, let me know when that is, because I know there was a commitment there before. I don't know if it's still there. But they have an apprenticeship program that they may be able to do labor for.
Ryan's ahead of you.
he is.
Yeah.
Okay, that's all.
Ryan?
I'd just like to say, I've been able to watch the progression of this over the past 5 years or so, and it has gotten to a point that it's sort of, looking at it, it's time to move on this, and it is, like the executive said, almost an emergency situation, and it is a building that we need to preserve. I do believe in the 90s there was a study done by an architect in Glen. I think it was a historically geared building study that the county historian has a copy of. That might be something that we could just take a look at and see if they deemed that the hip in the roof was of any architectural significance. Looking at it, I would say probably, it's not really a huge attribute in the building, So, but I think we could take a look at that and see what it might say.
Terry?
I know Kelly got a grant last time for painting that. Did anybody speak to her about trying to get a grant or?
I know she's been involved in the
Okay.
discussions over the years, and there's been nothing available.
A couple other things. Chairman Quackenbush has got a lift, so if you need to borrow that. And two, could you polish the dome while you're up there?
We could include polishing the copper, but I'm sure there would be an added expense.
There's nothing the matter, serious, there's nothing the matter with that, is there?
Excuse me?
There's nothing the matter with that, is there?
The dome?
No, that was, want to say that was done in the mid-'80s, I think. Because there were some structural issues that were taken care of because of the valve. There was some failures, but those were repaired. The dome was polished in the, I want to say mid to late 80s.
Any other questions?
Where we want to get the money from?
That's a good point.
That is your decision.
Well, didn't you say that there was something, did you tell me today?
Yeah, there is a.
I had it confused. I thought it was this
Yeah,
one.
we were looking at, there was some financing that was being used for the other courthouse that we were going to not, we weren't going to exhaust the entire amount. There's going to be about 100,000 left over, but it's not an easy, clean swap. You know, we'd have to finish the work, close out that bond, I guess would be the word, and then it would end up in the fund balance. But, you know, to just make it seem as if it was an easy swap, I thought that was a stretch to come. I mean, essentially, if we want to pay for it, it's gonna come from fund balance.
Yeah, in the initial discussion, if when the money was bonded for the new courthouse roof, if it was generically labeled courthouse, then there may have been some room to use the money for either courthouse, but it was very specific to the new courthouse.
My only question would be, if we do take action on this at this point and pass something out of committee tonight to the full board, is this a project that could be completed before winter and hoping to prevent any further damage?
Yeah, I talked with Matt earlier today. What I would anticipate if, see how everybody is here tonight, if there was support for the project as of tomorrow, I would start to prepare the specifications. I would contact the purchasing agent, have them advertise, have the specs available so that we would be opening the bids on September 30th. Then I can foresee an award relatively quickly because I don't think the award would have to go through the legislature. I think the executive at that point could issue the award, so I wouldn't have to wait for a meeting. So I could foresee this being awarded within the first few days of October and work starting shortly thereafter.
But we would have to be involved in order to appropriate the funds, right?
Exactly.
Yes, so we,
But I think you're saying,
But
when
can
they
keep-
open the bids, we would need to know which ones so we can move the funds.
And actually what I'm looking at is having the bid opening on October 30th, which would,
September?
excuse me, September 30th, I'm sorry, which would be prior to your meeting in the evening on the 30th.
Okay. Tom?
so are you saying resolution out of this committee or just chairman approved now that you all know about it? We'll put it on chairman approve it.
I think, right?
Yeah.
Well, and-
Since we don't know the amounts.
And we can prepare that resolution, and then we know, like we said, we do have one bid on it. We know the ballpark it's gonna be in. It's not gonna be any more than that, because obviously if we get other bids that are higher than that, this would be the lowest. So it'd be a transfer to one of Paul's line items, and then if there were, if we did need a couple thousand, if it was, that he has that in that line, he just doesn't have 7,000 in that line. So then we can then go ahead and execute at that point.
But you are going to ask that person to rebid, because otherwise everybody knows what his bid is.
It's not a bid, it's just an estimate. It was really just.
Everybody knows what his estimate is tonight.
Right, and they're right, there isn't anybody that's gonna give you the bid number on the estimate, so.
Any other questions?
But the whole goal to bring this up tonight without, was just to gauge the support and see if we could get this done before the winter. That's the goal. I mean, to not get it done, to go through this and not get it done through the winter, I think we will practice at this point.
Well, and to get the resolution on September's meeting as opposed to October's.
Joe, Duke, Barb, quiet. Any thoughts? We're okay? Okay. All right.
Thanks, guys.
Anything else to come before the committee?
Nope.
I'll entertain a motion to adjourn.
Yep.
Barb?
Second?
Done. Wait a minute.